Mortgage rates stink, but temporary buydowns are here to save the day. So, a temporary buydown is when the seller of the home that you're buying contributes money to lowering your interest rate on a temporary basis. The different types of buydowns are as follows: 1-0, 1-1, 2-1, 3-2-1. And all of these are aimed at reducing your monthly payment for the next year, maybe the next 2 years, or maybe even the next 3 years, ultimately saving you money while you wait for those rates to get less sucky. I don't know how to put it another way. They're awful. Let's take a closer look at how this works. Let's just say our full fixed rate is going to be 7%. And we got a 3-2-1 buy down. We negotiated that with the seller of the house. So, first thing, when we talk about a 3-2-1, and this applies very similar to a 1-1, a 1-0, a 2-1, is when we see, for example, in this example, three numbers, we got 3-2-1. That means this temporary buy down is going to temporarily reduce the interest rate for 3 years. So year one starts at the three. What that means is the interest rate that the buyer will feel will be an interest rate of 4% because 7 minus 3 is 4. Very easy math, right? The two means on year two, the interest rate will be 2 percentage points less than 7, makes it, which gives you a 5%. And then looking at year three with the one, that means it'll be 1 percentage point less than the full fixed rate at 6%. So the 3-2-1 gives a buyer an opportunity to have a less than market rate on their mortgage for the next 3 years. After that period, starting year four, all the way to the end of the term, assuming this would be a 30-year loan, it'll go to a full fixed rate of 7% until you either sell your property or refinance your loan. So a temporary buydown could effectively save you hundreds of dollars a month on your mortgage, depending on what type of temporary buydown you are able to negotiate. Now, this wasn't supposed to be a fully comprehensive video on every single temporary buydown option and how much money you specifically could save because everybody's situation is a little bit different, right? There are factors that do affect how your temporary buydown will work, what you can negotiate, and ultimately how much money you actually save, right? Credit score is a factor, the purchase price is a factor, how much money you put down, what loan program do you go with, all help play a role in what you can negotiate and ultimately how much money you save. So hopefully this gave you an idea, made you aware of a tool that can help you save money on your next home loan, that can maybe even open the door for you to say yes to making a purchase on your next home or maybe even your first home. And whatever the case may be, thank you so much for watching this video. This is Loan Officer Reacts. I'm Brian McIntosh. You're watching Tight on Cash.